This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And today's it's actually an SOS show. I mean, it is an emergency show. And we slotted it in because there's a lot of people who may or may not know they're in big financial trouble. And our guest today is a longtime friend, fellow Hawaiian rugby player for the Hawaii Harlequins. And we've been friends for years, but I hated him initially because he told me he was a financial planner. And, and I said, well, you're on the dark side, you son of a bitch. But we've always been friends, but I found out he had the same points of view I did. So let me give you an idea why I call this. And his name is John MacGregor. He's the author of a book, the 10 top reasons why rich people go broke. And my concern is today there's a lot of people, maybe they're not rich, but they're going to go broke. So this is the SOS show from Rich Dad. We're slotting it in tight. But let me give you my background on this whole thing about why we're in this crisis. This is in 1974. I was just getting out of the Marine Corps. I was stationed in Hawaii at Kaneohe Bay Marine Corps Air Station. And I was looking for a job. And so I went and I got a job with the Xerox Corporation, not because I love Xerox machines, but I had to learn how to sell. And that was the main reason. So I interviewed with two companies, IBM and Xerox. And I took Xerox. At the same time, there was this new thing called ERISA, which I really wasn't paying much attention to, but because I was interviewing with people, I kept hearing things called ERISA. And ERISA stands for Employee Retirement Income Security Act. And every time they say the governments tell you they're going to secure your retirement, you know it's toast. I mean, I don't trust my government as far as I can throw it, and you can't throw it anywhere. So ERISA then led to this thing called the 401k. So over the next couple of years, like say 74 to like 78, I saw this exodus of school teachers leaving the profession, because my whole family of school teachers, and they were becoming financial planners. It sounded good, like they're experts and all this. And all I was saying to my sick and not so politically correct dark side, this is the poor leading the foolish, And I said, we're going to have a disaster coming. So you have these guys who know nothing about money, school teachers, or all these other people who are just quitting their jobs to have a profession called financial planner. And then they were advising people who knew nothing about money about their financial future. I said, man, there's going to be a train wreck in the future. Well, this is the show. The SOS is here. So if you are an old guy like me, a baby boomer who's had a 401k or an IRA, what I call defined contribution, DC pension plans, this is your show. And if you're a young person with a 401k, I'll take laps around the rosary beads for you tonight because you're an idiot. Now, one more thing I want to say here is this. We don't make recommendations. We don't tell people what to do because that's the problem. That's the primary reason people get in financial trouble. They want to be told what to do. And naturally, they'll tell them the same old garbage, the Susie Orman rhetoric, cut up your credit cards, live below your means, invest in a well-diversified portfolio of stocks, bonds, mutual funds, and ETFs. Bullshit. I would never do that. But I don't have to do that. You see, you might have to do that. There's a difference. So that's why my advice depends upon who you are, or what I do depends upon who you are. Most people, not to be tooting my own horn, but most people can't do what I do. But I practiced for all these years, since I was a kid. So this is what this show is about, because you might be in financial trouble. Your parents or your grandparents might be in severe financial trouble today because that 1974 Act, the ERISA Act, which led to the 401k and these IRAs and Roth IRAs, was specially designed for people who want to be told what to do. Go to school, get a job. Dave Ramsey's a friend of mine, and he says live debt-free. And truthfully, most people should do that, but I would never do that. Debt is money. So I come from the other side of the coin. It's all coins have three sides, heads, tails, and the edge. So on the other side of the coin is Dave Ramsey saying live debt-free, and most people should because they don't know how to handle debt. On the other side of the coin is I went to school to learn how to handle debt, how to raise capital using other people's money. And when you've lost somebody's money, it's pretty frightening. And so that's why I don't do this stuff. So again, honestly, the Rich Dad Radio Show does not make recommendations. We don't tell you what to do because that's the problem. You got conditioned to be led by foolish people who tell you what to do with your money. And I meet so many young people, oh, I got a great job. It's got a 401k. I drop to my knees and take laps around the rosary beads. I said, this person's in severe trouble down the road. So with that, as you know, the markets are crashing. Our debt to GDP ratios are now like 125%. It's never been this high. We're the biggest debtor nation in the world. And people are in trouble. I don't really know what's going to happen, but something has to give. You just cannot keep printing money to solve financial problems. So with that, this is our SOS show again. I'll reiterate this. We do not make recommendations. We don't tell people what to do. We'll tell you what we do, but we won't tell you what to do. So as a longtime friend, John MacGregor from Hawaii, he's Obama's classmate, which I'll forgive him for. And a fellow rugby player, and we're neighbors in Honolulu on Diamond Head. So welcome to the program, John.
Always great to be with you, Robert. Always fun. And I couldn't, nothing more timely than this episode right now, given what's going on.
Yeah.
And by the way, let me just say, I'm a recovering financial planner. I've gone through the 12-step program. I am distance myself from that because that approach, the traditional methods of financial planning, I finally realized does not work. And we can get into that. But anyway, it's great to be with you.
And what is the title of your book?
That's the top 10 reasons the rich go broke. And it's powerful stories of people I knew that had everything. And you knew a lot of them as well. Yeah. And then they lost it all. And although it's a book about why the rich go broke, it's really why the masses are broke and struggling and living paycheck to paycheck.
But would you say that the stock market's in trouble right now and the bond market?
Oh, 100%. And that's just not my opinion. I mean, that's my analysis, and that's the opinion of so many other people. We are in a storm right now, headed to a hurricane, a tsunami. Things are not going to get better anytime soon, and people really need to prepare. And there's two things that I look at closely. One is the savings rate and the credit card usage rate. Savings rates are dropping hysterically, and credit card usage is skyrocketing. And that's always been a forecast for the future of what we're headed towards.
So if, let's say you're 65 years old, you're set to retire, you have a 401k, what would you say to that person? I mean, we're not giving advice again, but...
Yeah. Well, I'd be very, very nervous right now. I mean, there's no place to hide. The stock market's crashed and will continue to crash. We're looking at a bond bubble bursting. Crypto's gone down. Even gold has been in the red. And so it's a really challenging time right now to be that 65-year-old wondering, hey, I want to retire, but how am I going to do that on my 401k assets? And this analysis of it's not an analysis, it's a fact that Social Security is going to be running out by 2034. We're looking at the perfect storm. So people must get proactive right now. They cannot just bury their head in the sand, as I've seen so many people do.
Well, one more thing. Let's say you're a 30-year-old and you're saying, oh, I got a high-paying job and I got a 401k. What would you say to them?
Well, I mean, that's great. On this show many times, I've defended the 401k, not because it's a great retirement vehicle. It's because it's really the only retirement vehicle most people have. It was never designed to be the sole retirement vehicle for people. It was meant to be a supplement to people's pensions. But now the pensions are basically gone away. Companies aren't offering them anymore. And those that do are really curtailing the benefits. So now the 401k is really the sole retirement vehicle for most people. So if you're 30, I would definitely take advantage of it. But what I would be doing is educating myself to create my own passive income, building assets that generate cash flow. You cannot rely on your employer for your financial future.
Yeah, basically what you're saying is get active and not get proactive. And that's what the whole Rich Dad Company was founded for, was for those of you who want to learn how to be a capitalist, basically, how to manage your own frickin' money. Why turn it over to an idiot? I never understood that.
No, well, and by the way, this is not a paid endorsement. I tell this to everybody. The first thing they should be doing is playing the cash flow game. Because, Robert, you talk about context all the time. There's no better way to build context over what you want to do in your life and really understand how the system works. That, I would just play that over and over and over again. That is a game changer, especially right now.
Right, thank you. Because the reason Kim and I created the cash flow board game was to awaken your financial genius. Because everybody's smart when it comes to money. I was talking to a 5-year-old kid, and the kid knew the difference between a $1 bill and a $5 bill. I mean, the guy could count, which I can't say for most people, especially Biden. But anyway, But if you awaken your financial genius, greed is good. I mean, getting rich is fun. It's the most fun game I play. And the reason I like it is because markets go up and markets go down. It's like life. And it's just real life. But most people, so awaken your financial genius and take control of your financial future. So that's what happened for me, was that when having a rich dad and a poor dad, I saw my poor dad, a PhD from Stanford and Chicago and University in Northwestern. He was just so content to have a PhD and a job and a government pension, which the government pension is kind of a defined benefit plan where you guaranteed a paycheck for life. That's defined benefit. And that's why so many people are government employees, which is why our government's going broke, because we got all these people who get a government job for the defined benefit pension plan. We all know that. We all know you're cowards. And, you just want to be told what to do and have somebody take care of you, give you a bottle of milk, which is no baby formula in it, unfortunately, but you're sucking on the nipple of the government, and the government's broke. That's a defined benefit pension plan. And then in 1974, they shuffled off to Buffalo all the baby boomers into defined contribution, which meant you had to contribute to it. And if it was there when you retired, good luck. You were lucky. But if it's not there, and that's what we're saying with this SOS show, it might not be there. So, John, the difference between active and proactive, being told what to do and all this, what are you doing? I mean, you're a certified financial planner, which is a milestone above, it's like being an accountant. What is it between a certified financial planner and a financial planner?
Well, that's a great question. You know how long it takes to become a financial advisor? 6 weeks. Pass the Series 7, and now you are a financial advisor, capable and legally able to manage people's life savings. I took my dog to the dog wash person the other day, and there's a poster in there, and it said, our dog washers have a year and a half of experience before they're allowed to wash dogs. And here's a financial advisor who sits for an exam in 6 weeks, and now is the mentor of your money. It's really astonishing. Like we always talk about the hairstylist, it takes a year and a half to become a hairstylist. Problem is, when a hairstylist makes a mistake, the hair grows back. When a financial planner makes a mistake, it doesn't. I could just tell you countless examples. I've spent years coaching financial advisors, and it's amazing how little they don't know. Most of them are very, very good people. They just don't know what they don't know. It reminds me of a time where I shared an office with an insurance salesman, and suddenly he got his Series 65, which is even less, which is much easier to get than the Series 7, and now he's an investment expert. This happens all the time. It's a key story in my book. The 4 most dangerous words I hear: I trust my advisor. That's the most dangerous thing you could possibly do right now. I've seen that countless times. But here's a perfect example. Couple comes into my office. They're approaching retirement, and they're like, John, we referred to you, or we saw you on TV. We trust you. Here's our money. Just take it. No questions are asked, nothing. I try to explain my philosophy, what I do, what I charge, and they say, John, we trust you. Take our money. And that happens over and over again. That's the chicken dinner syndrome, right? Couple gets invited to the free chicken dinner, and they're just wowed by the presentation and the free dinner. And before the presentation's over, they're willing to hand over all their money to this stranger without any due diligence. It's an absolute mess.
So John, you started off as a financial planner, and you were training other financial planners. So and you're a certified financial planner. When did the lights kind of go on for you personally?
Well, it was about 12 years ago. I remember it distinctly. You and I and Kim and JW were having dinner, and I was explaining to you the frustration I was having with my clients. And it was a typical scenario of the thousands of clients that I've worked with, tried to help and coach. They'd sit in my office and they say, okay, John, let's do this. And they would lay out all their financial information, their statements, and I'd input it into the system, and I would immediately see that they're headed for disaster. The graph was showing them if they continue doing what they're going to do, they're never going to be able to retire the way they want or when they want. And they would get all nervous and excited, and they'd be jabbing each other going, honey, we got to get serious. So I then map out a plan, a blueprint for success with all the strategies, the tactics, and the tools, and everything they needed to do as a bulletproof plan. And we would high five and we'd shake and we'd pinky swear that they were 100% committed to the plan that we just laid out. And they would run off into my office. And as soon as they left my office, they were on their way to Best Buy or an electronics store to buy a new flat screen TV on a credit card that's already maxed out. So in other words, all that planning, all that information that I poured into them had a shelf life of like 10 minutes to a day before they're back to living the same life, the same habits, the same behaviors, back to what I call living on Pain Island. All that planning did nothing to affect real meaningful change. And what I realized, and at that dinner, it's when JW reached out and he leaned in. He says, John, because that old school stuff does not work. It's because information does not cause transformation. Information does not cause transformation. That's what I realized all this time. I was just pouring information into people thinking that that was going to affect change, because this isn't a lack of information, because there's plenty of information out there, people showing what to do. This is a behavioral issue. And the only way to change behavior is at the core of someone's mental programming. That was my epiphany, my aha moment, when I realized that the traditional methods of financial planning does not work for most people. So anyway, that's my long-winded answer to you.
So we're going to go to a break, but I want to go back to what my favorite scapegoat is our education system.
Yeah.
You know, I mean, our education system is so corrupt, broken, and woke right now.
Yeah.
But most academics have this point of view. I'm not interested in money.
Yeah.
You know, there's a self-righteous, stupid underlying attitude, because I grew up with them. I'm not interested in money. I'm just going to do a good job for the kids because my whole life is dedicated to the kids. Well, why don't you educate them about money? Well, because I'm not interested in money. And there's this underlying mantra I've heard in so many people who are government employees. I'm just not interested in money. It's the biggest bunch of crap I've ever heard, because they're the first guys that fight when you try to take their paycheck away. And they'll sell their soul for their paycheck. So we come back, we've been going on more with John MacGregor, dear friend. And by the way, JW is this lunatic we played rugby with from Hawaii also. And he saw the light and he went into education, which is another problem. But anyway. It's when,
only JW. Go right into the fire.
when rugby players start becoming educators, we're in deep trouble. We'll be right back.
The Rich Dad Company's mission is to elevate the financial well-being of humanity. And one of the ways we do this is through the Rich Dad Radio Show. The first investing tip we tell our listeners is to make sure their portfolio is diversified. One way to do this is by investing in companies that are themselves diverse. Companies that operate around the globe, companies that are innovative, or companies that provide differentiators in the respective category. Even better, invest in companies that meet all three areas, like Akamai. Akamai makes life better for billions of people, billion times a day, through their cybersecurity, cloud, and edge solutions. They have everything that investors look for in a company that has long-term stock value. Strong financials, a global platform, diversified across products, and a leader in the security space. To learn more about Akamai, visit their website, akamai.com/richdad. That's AKAMAI.com/richdad. And make sure to explore all the ways you can keep your portfolio diverse.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. This is our SOS show, Save Our Savings show, we should say it. And the reason I call it SOS, we're squeezing this in. Our schedule's really tight. We have a lot of other shows coming. But given the state of the economy, the stock market, and our brilliant leadership under Biden and Kamala, the border Harris czar, jeez, a war in Ukraine and inflation going through the roof, and Elon Musk laying off 10% of his workforce, we thought it'd be an SOS show was important. So our guest today is John MacGregor, Rich Dad Advisor. We brought him on board because we do need a financial planner's profile, because most of our friends are entrepreneurs and they have no idea what financial planners do. So we have, so anyway, we're talking about what you can do now given the state of the economy. And if you're praying for your retirement, let's say you're 65, you might be in serious trouble. So Sarah, what do you think so far? As a young person, if I told you I'll give you a 401k, what would you say?
No, thank you.
Why?
Because it's losing its value, it's so risky. You have no control.
That's the word. Yeah. You have no control.
Yeah. So I would much rather have control over my investment.
And where were you this whole last week?
At my investment property.
Yep. And you learn by doing.
Right.
And that's control.
And I think that's the thing I see in this generation is we, I'm at the older end of a millennial. I'm just outside of a millennial. But they're so into instant gratification. They like that. Like, for example, crypto. They like it because you can buy it now. And, for a long time it went up.
Yeah.
And so they were making all this money and becoming these crypto millionaires. And they're learning hard lessons today, which your generation has learned before. You've seen ups and downs in market crashes. And I think that's something a younger generation just doesn't see. And so they don't believe it until they actually experience it. And I think we're headed into a time where they're going to experience it.
Well, I think in the baby boom generation, they're out of time. So your generation still has time. There's a very big difference because time is a big factor in this whole thing. So it's good. The crypto guys are learning it early. But the problem with our generation, my generation, was we came of age around, let's say, 1970. Nixon took the dollar off the gold standard, and all we knew was a boom economy. Even right after 2008, they just printed more money and it kept booming. But that's why I said our debt to GDP is now 125% debt to GDP. That means for every dollar we bring in, we're spending. We can't cover it. Our tax dollars can't cover it. So they keep borrowing more money. Not really borrowing more money, but kind of propping the market up. Yeah. And now we're at the end of the line. So anyway,
well, here's a good example. My younger brother, he's 35. He's always worked for big corporations, so he's had 401ks. And 2 weeks ago, he asked me, he said, "Have you heard all this talk about a recession?" And I said, "Yes." And he said, "Well, what does that mean exactly?" And then I, of course, gave him technically. But he said, "How bad do you think it is?" I'm like, "Shane, I think it's really bad."
Yeah. And let's hope we're wrong. But that's why this is an SOS session.
Old friend of ours, John MacGregor. And John, another thing about Rich that I want to say this, we don't tell people what to do. We don't give financial advice. We don't say buy real estate or buy stocks or buy bonds or sell or whatever that stuff. But what are you, after you kind of realize what was going on in the stock market, and there was all markets boom and all markets bust. But this could be the biggest bust in world history. It's a global bust. We might have a global depression again. So what did you start doing differently?
Yeah, no, it was a complete transformation in my thinking in terms of how to generate income in these types of markets. Even JP Morgan, the head of JP Morgan, Jamie Dimon, said, we are headed for a hurricane, not a storm, a hurricane. So things are really going to get ugly. And our debt to GDP at 125, that's not much further behind Venezuela, whose average citizen is 19 pounds underweight because there's no food. So we are headed towards that. So to answer your question, what I'm doing is I'm 100% cash. I have moved completely out of the market. Having said that, I do generate cash flow by trading options. It's a very successful strategy that I've incorporated. I have my books, my online course, and speaking is now starting to pick up. So I have other sources of revenue. I don't work for a paycheck. I haven't worked for a paycheck in 15 or 20 years now. But I am extremely proactive. And I'm always educating myself all the time, as you are, Robert.
Right. We're always, when we get together as friends and all this, we're always, like with George Gammon and Kenny McElroy and Tom Wheelwright, we're always discussing money and money strategies, which goes back to before the break. I grew up in a family of government employees, and their whole thing is this self-righteous attitude is, I'm not interested in money. I just want to do a good job for the community. Biggest lie I ever heard. You try to take their paycheck away, they fight like dogs. They'll bite you in the hand. It's the biggest lie. And so many people will sell their soul now Well, if you don't take the vaccine, we'll fire you. So they take the vaccine. I'm not saying I'm not talking about the vaccine now, but they'll do anything to keep that job. But they're not interested in money because money is the root of all evil, And that's what I hear going on all the time. So anyway, John, you thought trade options. I mean, did you just one night start trading options and make $1 million?
No, I mean, it took me a while to figure this out, but the strategy I'm using is not complicated. It doesn't require advanced math. You don't even need to understand the economy to do what I'm doing. It's a very simple, well-written strategy. My 92-year-old father is implementing this strategy. He's been using the strategy for 5 years. He's generating $10,000 to $15,000 a month in his spare time as a hobby. So no, this stuff is not complicated. But to your point, Robert, I mean, I tell people over and over again, I get the emails and the messages from people that are struggling. They're like, what do I do? And then I try to tell them some things that they should be doing, but it just, they won't do it because they're just fat and happy. They've never been through anything like this. And it was, it always reminds me of what Mark Twain said. He said, no amount of evidence will ever persuade an idiot. And that's sadly, so many people today are living with their head in the sand, and they're going to wake up one day and they're going to see their 401k balance in half and their pension benefits that they've worked 30 or 40 years for cut in half because there's no money, despite this guarantee that some agency, promised them so.
And so I'll just, my very first book, long before Rich Dad Poor Dad, was a book called You Want to Be Rich and Happy, Don't Go to School. Because I started this whole thing off is when financial planners became the fad new profession, every school teacher, not every, but, they were just leaving in droves.
Yep.
And I said that was the poor leading the blind.
Yeah.
It's just shocking what's happened. Our problem is education. I mean, it's so hardcore Marxist right now. And this is always, my latest book is Capitalist Manifesto, is the communist game plan. It has always been to invade higher education. Yeah. So in 1930, the Frankfurt School sent teachers to Columbia University in New York, and that's when the student protests began. And America became communist through our education system.
Yep.
So that's why I've been fighting and writing and all this. Another thing, too, about options is that just because John doesn't mean that you should do it, because I studied options for about 3 years, and I'm a Marine, where our brains aren't that fast. I just don't enjoy it. Mm-hmm. So if you don't enjoy it, don't do it. So I'm a real estate guy, and I'm making more money than ever before today. But because I am a proactive investor, I was just saying to John, I just sold 2 properties that we made quite a bit of money on. And I said, where do you put your money? Well, you put it in cash. I bought Wagyu bulls, breeding bulls. And I've always, this is a Japanese breeding bull, which I always wanted to be, but never got there. But anyway, I'm in the food business now. And I'm in the oil business, because oil, and I'm not stock business. I don't trust stocks or bonds. I never have. I don't have any. Well, I do have some, but they're companies I took public. But I am proactive, and most people, like you say, want to be told what to do. So I write about what I do in all my books. There's a difference there. So I just said, just recently I sold 2 pieces of land. I made $400,000, and I'm putting it into Wagyu cattle and cows. And next May, they drop more cattle. So it's called cash flow, And it's not that hard to do, but you have to kind of know what you're doing. So my whole strategy, being a Marine and a C student and never been bright in school, I always ask people who are doing what I wanted to do. So my friend who is investing in the bulls, that's what he does. He invests in bulls. And this bull is $500,000. And he breeds, probably several hundred cows a year. And think of all the calves that drop from that. That's leverage. I just kind of like the whole formula, and I like to eat. Now, if you don't like to eat beef, then chew on some celery. I don't really care. But you get your little personal dignity up there, and you miss the whole point here. Invest in what people need. People need oil. I invest in it. People need housing. I invest in it. People need food. I invest in it. There's a very big difference, but I invest with people who are doing what we invest in. Any comments on that, John?
Yeah, it just reminds me of the first time I walked into your kitchen 15 years ago, and all I saw on the kitchen counter were books. And it just struck me because not only do you read books, you devour books. Because by the time you've been through a book 1 or 3 times, which you often do, it is loaded with those little sticky tabs for important keynotes. So I think that the overarching theme here and why this show is so important and so successful is this all about education. It's all about education. Yes, the school system robbed you of any money education, but you can't blame them. It's time to move on and start educating yourself. And that's the key to this. You cannot sit back and wait for someone else or some other entity to take care of you. There's an absolute train wreck of a strategy. That's the strategy I call hope. And hope is not a retirement strategy. Sadly, too many people use hope as their strategy.
But the worst thing, John, is a lot of those people you talked to years ago, they're too old now.
Mm-hmm.
Do you know what I mean? That's the problem.
That's the problem.
So let me ask one of the final questions. What do, as a new financial planner, like as a new Xerox salesman, I was trained to sell against IBM at the time, IBM machines. So as a financial planner, what are you taught, when the market crashes like this, what do you tell your clients who get nervous?
Yeah, the traditional rules that we were taught, that I was taught back in the day by the best firm on Wall Street, was buy and hold, stay for the long term. It's not timing, it's time in the market. Those are the cliches that we were taught because they don't want us taking our clients' money out of the market, because then there's no revenue, right? There's no assets under management. So they want us to stay.
That's the key word. What does assets under management mean? They say, we have $1 billion under management. What does that mean? Yeah,
these are the commercials you see on television, right? We're different. We're fiduciaries. We don't charge. It's all nonsense. Assets under management is basically an investment firm or a financial advisor that's trying to gather as much assets as they possibly can, manage those in the stock and bond market, and then charge an asset-based fee doing that.
So that's what they're based on. So we're not going to mention any names here because I want to stay alive here. But, I watch these TV commercials. We're different here. We don't make money unless you make money. What do you think when you see that?
That's just absolute BS. It's so false and so untrue. They don't do anything different than any other financial manager. No financial manager, asset managers charge commissions. They say, well, you don't charge. They're a fiduciary, which is total nonsense. That word is so overplayed. It's basically a marketing tool for financial advisors. I can clearly show that you'd be more safe working with a non-fiduciary than you would with a fiduciary. And by the way, this whole fiduciary word, the biggest financial scam in world history was Bernie Madoff, and he was a fiduciary. So this notion that you're protected by a fiduciary is nonsense. I'm not saying fiduciary advisors are bad. I'm just saying do not trust somebody just because they say they're a fiduciary.
What is a fiduciary?
Fiduciary, well, you have 2 sets of rules. A fiduciary is that you're working in the client's best interest, where a non-fiduciary is you're offering the most suitable investments. So it's suitability versus best interest. And it always sounds great that my advisor's working in my best interest rather than somebody who's just being suitable. But I will tell you, the fiduciary advisor, it's the Wild West. There's very little oversight as a fiduciary. You're your own compliance manager. You can invest in anything. No one monitors what you say, what you send, what you present. It's like I said, it's very much the Wild West for a lot of these fiduciary advisors. So again, I would not fall into that trap. It's a dangerous trap, and too many advisors are using it as a marketing ploy to attract new clients.
So fiduciary in technical terms means you work in the best behalf of the client.
Yes, correct.
And your non-fiduciary means you're doing what's good for you.
Well, you're doing what's suitable. And in all my years coaching both advisors, fiduciary and non-fiduciary, I've never heard a non-fiduciary say, well, I'm just recommending stuff because it's suitable. No, 99% of advisors are trying to do the right thing for their clients. regardless if they're a
Right.
fiduciary or not. And if they don't do the right thing for their clients, I'm telling you, they have so much compliance oversight, monitoring everything they say, do, recommend, that, it's very difficult to, that happens all the time, but it's very difficult, more difficult to scam a client as a non-fiduciary than it is a fiduciary.
Another ad I see, it's the same company. They advertise the most, and it's, Ken McElroy and I always say, the more they advertise, the worse the investment. Or in real estate, the
Better
bigger
brochure.
the bigger the brochure, the worse the property is.
Oh yeah.
So when somebody says we don't make commissions, we don't sell commission product, what does that mean to you?
Well, this old notion, this was back in the day when a money manager was buying and selling stocks and bonds, you get a commission every time. That is so old school. That doesn't happen anymore. So these money managers, whether it's a mutual fund or an asset manager, or third-party managers, we call them, they don't charge commissions when they're buying and selling within that portfolio. They're charging the asset-based fee. So the fact that they say that they're not charging commission is rather ludicrous.
It's a lie, isn't it?
It's a lie. It's a fabrication, like they're doing something better than others because they don't charge a commission. No one charges commissions. It's just, it's ridiculous.
So they get money for assets under management.
Yeah. And then the other thing is they say at the end, we do better when our clients do better. Well, that's true. But when the client does worse, like in these markets, they're still getting their asset-based fee. They're still making money on a smaller amount of money, but they're still gathering their fee. So again, that whole commercial is so misleading. And I'm surprised they haven't been called out by now by the regulators.
And then there's a certain female that's famous on television, especially PBS.
Oh, yeah. Your friend.
And my friend. Jesus, cut up your credit cards and live below your means and diversify. I call it diversification, de-worsify. Just de-worsify your account.
Yeah.
So this person was charged with something, right? And we won't mention her name.
Yeah.
What was she charged with?
It was credit card fraud. I think it was a debit card fraud, amongst other things. You just Google her name, and boy, there are so many documentaries and videos on how she scammed people. It's quite a shame, actually. It's sad because it ruins the whole industry.
But she's a star at PBS.
Oh yeah, yeah.
She was always on Oprah because they were buddies.
Yeah.
I wonder what how much assets under managed fees Oprah was getting from this woman.
Oh gosh, yeah.
I sit there and watch all this horror show going in front of us, and then so many people are being trained because they go to school. Tell me what to do.
Mm-hmm. It's why 78% of people, working adults, these aren't homeless people, these are working adults, 78% of them are living paycheck to paycheck. Yeah. That's why. Tell me what to do.
So let me give you an example of that. Dave Ramsey is a friend of mine. His advice is solid. Live debt free. But the other side of the coin is somebody like me. Mm-hmm. And what I studied was how do I use debt as money? Because debt became money in 1971. So I learned how to borrow money because debt is tax-free. Then I invest in property, and then I get my income tax-free because of appreciation, depreciation, amortization. These are tax laws. Mm-hmm. But that takes study. You don't just do it overnight. So that's Ken McElroy's books, the ABCs of real estate, ABCs of real estate investing. But you got to study. If you want to be told what to do, just listen to the TVs and pray. The buy, hold, and pray, I call it.
The problem is, Robert, and we've seen this in the events that we've spoken at around the world, is every single event we get these people coming up to us. John, what do you think about Bitcoin? I'm thinking about day trading. I'm going to get my real estate license. What do you think about multi-level marketing? All these, what I call below the line, quick fix solutions, thinking that by buying these programs, it's going to change their life. And that's the problem. People are looking for this quick money-making fix rather than, like you said, educating themselves. And that's why I always tell these people, play the cash flow game first before you do any of this stuff. Otherwise, you're just wasting time, energy, and money.
Yeah, you have to do something.
Do something.
So once again, John, thank you very much. This SOS show. John is an advisor, a dear friend. So look, guys, if you take financial advice from a financial planner or something, but take financial advice from a rugby player, you better get educated. So thanks, John. Thanks for being part of this program.
Thanks so much.
And we'll be right back. Thanks, John. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad money. Bad news about money. This is our SOS show because it's bad news for a lot of people. On the other side of the coin, it's actually good news because during a crash is when you make most of your money. So with that, I want to thank John MacGregor and for this show. Again, we don't give financial advice, especially listening to rugby players. Definitely don't listen to us, but listen to what we do. The difference is we do things differently. So I don't do options trading like John does. But I do buy Japanese cattle.
Identical. Same thing.
Same thing. But anyway, Sarah, what'd you think?
Great show. I always love hearing from John because he tells it like it is, and he really kind of breaks that
the stereotype of the
right, exactly. Yeah.
I have a financial planner. What do you have?
And I love that he talks about fiduciaries because it's a word that we're taught, that means that, they're going to look out for us. We're safe. Our investments are safe. Yeah. And he really breaks down that facade. One quick thing, you guys were talking about your friend. Well, I just want to say 2 days ago, she came out and said that I-bonds, do you know what those are?
No.
There it seems like a governmental bond of some sort, but she says I-bonds currently offer a very high yield that have virtually no risk.
Oh, Jesus.
And people will read that.
Yeah.
And take that advice. And that's why I love this show so much, is because we don't give advice. We give awareness that these things are out there, but you have to get educated. You can't just follow someone else's advice.
Correct. And then check her out, please. I mean, she is this darling of PBS.
Well, and wasn't she the one, too, that was encouraging people to put their credit cards in the freezer?
Yeah. I almost had a heart attack when she said that.
Yeah.
I love my credit card. I mean, how do you go anywhere without a credit card?
Yeah. So anyway, good show. I always love hearing from John.
And what's it like having your own property now? I mean, becoming proactive.
It does take, so first of all, it is very stressful.
Yeah.
I'm not going to sugarcoat it. I'm learning a ton. It is not easy. I've already experienced a little bit of horror stories, and we're only a month and a half into this. But I will say, it does give me relief in the sense that I'm not relying on somebody else
to tell you what to do.
To tell me what to do. I'm not relying on my 401k that it's at the mercy of the stock market. Like, I feel like I love that control.
Yep.
And I wish other people could experience that, or would just, to try. And I think that a lot of that fear holds people back from trying.
Oh, God.
And not, I want to be clear. It is hard. It is not easy.
Tough.
But it's worth it.
Yeah. When Kim and I started off, I don't know how many years ago now, it was miserable.
Mm-hmm.
Tenant problems, breakdowns, this, that, painting, things, costs go above your rents, and you learn management so quickly.
One of the things, simple, this should be obvious, lawn mowing. We don't live there. We don't live where our properties are. Who mows the lawn?
Who pays for the lawnmower?
Well, so it's like, luckily we found somebody, that lives in that area that'll do that for us. But it's those little things you don't think about until you like we showed up this weekend, and I was like, man, that grass is pretty tall. And that's like, oh yeah, we probably should get someone to mow the lawn every week. But anyway, it's just little things like
that's
that.
That's how you learn.
Yep.
You have to do something.
Yep.
And I'm going to give a plug for back up with John. The reason Kim and I created the cash flow board game before I wrote Rich Dad, Poor Dad was to awaken your financial genius, because you have to do it. You have to fill out the numbers. You see how cash is flowing through the income statement, balance sheet, and the statement of cash flow, which is what your banker wants to see, is your financial statement, not your grade point average.
Right.
Stupid people. Who cares what your grades were if you're broke, But anyway, the reason we created the cash flow board game is you have to do something. Mm-hmm. So thank you for listening to this Rich Dad SOS show. Thank you very much.
Thank you.